Hey there, traders. What's going on? Jamie Saettele here, Midweek Strategy Webinar with SB Trade Desk. It is May 10th, 2018. And let me know that you can hear me before we get started. Sound is good, says Dagan. And Jay Hess says, good morning. Good morning to everybody, or afternoon or evening or wherever you are. All right, so short-lived dollar pullback this morning. And being, extra patient on trying to get into a euro long. Had the pound long, which looked like it was going to work out for a little bit, and BOE Carney kind of, I guess, put that fire out. But let's take a look at the bigger picture. So we are getting into 12,000 in US dollar, the Dow Jones FXCM dollar index, a lot faster than I thought we were going to. Dollar is running super hot right now, as you know, and I think this is the biggest level to pay attention to. So here we go. Here's the daily chart, and you can see that parallel here, which is where we consolidated before we broke down in January. And we're getting really close. And then if you draw the fork back from the January 2016 high, you're getting, parallels there where we're going to intersect more or less, right? So the 75 parallel was support back in January. Then we went into the lull, and now we've broken to the upside and haven't really stopped. So this is where my focus is for kind of big dollar resistance. As for, what the broader trend is, like the huge trend, I still think that it's down, and it's easy to forget that in the grand scheme of things, but don't forget like this chart on the really long-term page, right? This is just showing dollar cycles historically, and that, typically 9 to 7 years, each cycle is going to last, right? 9 years after Bretton Woods, 7 years up into the mid 80s, 7 years down into 92, right? 9 years up into 2000, 7 years down into 08, and 9 years up into 2016 or 2017 if you want to count, the first day of the year of 2017 as the high. But either way, that puts us in a new cycle, in my opinion, right? I could certainly be wrong, but this is kind of where my head's at on a very, very grand scale. All right, so back to this level to know, right? We go to the short-term chart, and we have a fork here. This is a 4-hour chart. This morning, when the dollar was pulling back, I thought we'd at least get to this parallel, which was support, resistance, and support in late 4/27, April 27th, and then again on May 4th, last Friday actually, and that did not happen. So it's, whatever, it's back to looking at 12,000. We're going to have different strategies for various currency pairs, as we get into, the individual dollar pairs, of course. I don't think it's a full on necessarily dollar market at this point. If you look at some of the emerging market currencies, they're really rallying today significantly, and you've got kind of euro coming into a huge level, but dollar CAD's also a support, right? So might make for an interesting cross trade too. All right, so that is my focus on dollar, 12,000. If we eke out another high here and start to get some good divergence and roll over, maybe we can do something before that. But this is the general thought, right? Just keep it in your mind, 12,000. And not that far away, right? The high yesterday was actually 11,960. So, we're pretty close. All right, moving to DXY real quick. Here's the weekly, another fork. We've already actually tagged the 2015 May low, right? So here we are 3 years later, and we are essentially at the exact same spot. So currently 92.90, and again, this is gonna be more euro. So it's also why I have kind of euro into support, maybe a little more so. And what just happened here? Did we, oh, see, I start doing a webinar and then pound dollar tags, what is that? 34.59. 57 was the level we talked about. And it just, I don't know what just happened, but it just ripped like 20, 30 points, or no more than that, 60 points. Any news out there? I don't see any news. Anyway, good level. Clearly, it responded to it. All right, so we're into what I would call kind of a big zone, right? High so far is the other level being about 94, maybe a hair above, and that was the resistance level for the fork back in November, support back in June of last year. So you can look at it right here, and you can see that it's awfully precise, right? The median line here. So that's the level. Now, if we get all the way up there, that's another thing, right? If we get all the way up there, I mean, that's going to put euro probably near 117 or so. So I'm not too keen on that at the moment, to be quite honest with you. I feel like euro's due for a little more of a bounce. But hey, if it wants to go straight to 117, then we'll deal with that too. But again, this is just the biggest level to know. You're already in it, right? This is the zone. 93.13 to 94.08, so we're already there. But 94.08 maybe is really where they cry uncle, okay, on the dollar, generally speaking. Okay, so let's go to euro and first, and I want to actually introduce or talk about, I shouldn't say introduce because I know we've done this before, but I should say talk about some tactics with median lines and trend lines, et cetera, right? So I had it on the weekly chart. All right, so this is the weekly euro chart. This is linear scale, not log. Linear is the one that the trend lines actually hit the highs from this year. And of course, that's not the case with log. It's a little higher. But, you know, I've said many times, I don't think there is a fast, you know, cut and dry type of rule that you have to follow. I think it's just, you know, follow whatever the market is following. And in this case, it does seem to be that the market's following the linear scale. So tweeted this out a couple nights ago, right as we were hitting a level. And you can see just simply there is an angle here that is working. This is the angle. And, you know, if I zoom into this, you can really see how important this level seems to be. So we extended off the high from 2013. And you can see the support that happened here, right? Kind of subtle, but it did happen. And what I find interesting, it's not just like when you know, rebound off of a level or when you know, reverse off of a level. It's also what happens when you go through the level. So look what happened when we went through the level here. This was back in 2014 during the extreme dollar uptrend, euro downtrend, right? That little support came in, then you consolidated around it, and then the euro absolutely fell apart, right? So that is important as well. And then if we scroll forward to more recent times, it was resistance in for the September high last year, right? And then you actually tagged it as support in January, and we got the final move up. And now we're right back to it. So obviously, this is a really big spot. It's why I say that I don't think, or I'm not keen on the idea of euro going to 117 or so first before we get a bigger move up, right? Just this level. So I mean, this is huge. Does that mean that we can't, like, you know, stab into a Friday low or something? No, we can. It's a possibility, of course, before you go higher. But it also gives us good upside to look at. So just the median line, which is currently 2050. I mentioned on any longs, I'd probably be just targeting 120. You're going to have, you can see at this dollar move, you're going to have sellers try to come in on euro on any little bounce. But as I mentioned too yesterday, the sentiment is awfully extreme. You have DSI, which is the short-term, survey of traders, hit 7 yesterday. That is, below 10 is extreme. 7's pretty crazy. So, we're due for something besides this down move. And then if we're looking also at the bullish fork from back in 2015, okay, we're awfully close to levels, right, that have been fairly important. So if you extend off of the December 2015 low, remember this was ECB back here, that's going to get you, support, resistance, big important levels that the market traded on pivot wise back in May of last year and July of last year. That's going to be a tad bit lower. So if we do spike, say, to another low, today or tomorrow, next few days, then I'd keep that in mind. Really, it's the closing prices that are going to be awfully important, right? You don't want to close below this line, in my opinion. Otherwise, the euro could actually be in more trouble than I think. But I just thought that was a very interesting longer-term chart, and it's amazing how the long-term charts, and I say this all the time, but how the long-term charts can and do oftentimes provide extremely precise reversal points, right? We're so used to, and the tendency is to look at short-term charts to try to find, the pivots or the turns, but the longer-term charts actually sometimes, oftentimes, are much better because they're much more important. So there's your long-term euro look and why I think this is such an important level. Now let's go into euro short term, and here's why I have been looking at. I'll get rid of this real quick. This is why I've been looking at support as well. So we all know there's 3 different kinds of forks that you can draw, right? You have your regular fork or original fork, but I oftentimes err to the just channel because that's really what the market's trading on, right? You're connecting 2 points. So if you look at a channel like this, right, you have the width between here, the lower parallel and the midpoint, right, and the upper parallel. You can extend your channels, and oftentimes you'll get, we're going to do this with the New Zealand dollar too, but you can extend your levels, and oftentimes you'll find that they provide pretty good supports, right? So what we've done here is we've just extended the width of this to here, and notice how that was support. Okay, now at the same time, this would be resistance. Okay, you can see that it was resistance actually. It was resistance right here. Okay, so that would be resistance, and that's also about 120. So that's why I was targeting 120 if we end up getting along. But you could very well trade between these for a little bit before you end up, resolving one way or the other, upside or downside. And by the same token, the next downside level, by the way, is extending the whole width of the channel. So you're taking this width, right, and extending it all the way down. That's just a common, it's a general kind of method with channels, is to, once a channel breaks, tend to go the width, but you get bounces or a counter trend rally from the halfway point. And you can see it actually worked really well this time. So from here, I still want to try to get long. I'll let the near-term volatility pass and see how the the market finishes the day here, and always aware, obviously, of the Friday low problem. But let's see here. Dagon asking, would this work? Let's see. I'm having problems clicking on that, but let me click on it here. Yes, absolutely. That would certainly work. In fact, was looking at that as well. I'm just, like I said, I kind of err to the flatter channel because it gives you'll be playing with this. The market will be trading within these levels for a much longer period of time than they would be trading, say, between that steeper slope. Okay. And it's nice to find something that you can trade with for a longer period of time, right? Like, I don't know how this is going to play out, of course, but if we start hitting the levels, like you could envision us maybe going down here, tagging this again, coming up, right? Something like this, and then down into here, right? And I think that's a real possibility because you'd have 1, 2, 3, 4, 5, right? So that is where my mind is at on this. Now let's step back and scroll out a little bit. So this is your trend line from January and April 2017. And you see where that intersects down here. This is kind of early June, and that's going to be all the way down pretty close to the lows from November. So, while my immediate bias or immediate setup or whatever is to try to get long for a bounce on euro, I'm recognizing that we could very well be down at below 116 by the end of June. Okay, that's a big area to pay attention to and to know moving forward, right? And really, since this move started on the downside, we haven't had much of a correction, right? So this is probably starting the first process of that correction, and expect that it will get sold, right, once it's final. And whether that's 120 or closer to 120, 50, 70 or something like that, we'll know that we'll probably be wanting to fade that move for a move all the way down to here. Okay, so that's euro, pretty clean on these levels, and it's always a good thing because then you know exactly what you're looking for and where you're looking for it to happen. All right. British pounds. Let's go to British pounds. So thought we had a good one with the entry at 35.20, and we survived a couple runs on the downside, and it just didn't work out here today. But risk management, we no loss at least, and break even, I'm fine with that. But here we are, right? This was the next level we talked about for maybe a washout, and it's 34.57. Again, that's the low it's the year-to-date low. So you trade down here, you're going to be at a new low for the year in pound. It's also, as mentioned a week or so ago, this is the resistance after the Brexit vote, right? This is Brexit. Your initial kind of recovery found resistance to that level. So I view this as a pretty important spot. And, if we can get some sort of construction action down here, I don't know, maybe an hourly reversal would do it down here. I don't know. Something on the upside, a 4-hour reversal, whatever, I would be keen on getting long again for a move back towards the median line, which is going to be shy of 138 at this point. So 135.30, by the way, is really big. Okay, that's the weekly open, but it's also it's the high volume bar from this morning. So it's this bar here. So what I'd want to see in order to get long is, again, I don't know if we stop here or not, but if we do, then we want to see kind of a run up, short-term constructive price action on the upside, and then we'd be probably trying to buy 135.30 or so again, right? 135.20, 30, that area. And if we get that, then we should have an opportunity to be long again with stops that would have to be a little wider at this point. You can't do 30.80, I don't think, but 34.80, but that's just where my head's at. Now let's say that we don't stop here. Let's say that we keep going. Your next level is a square root level, okay, and that's 33.83. All right, and that's going to be down. You can see this parallel here. That was the support back last year. So what was this? June 21st and August 24th. Okay, so that would be the next spot. So, you know, we're at the mercy of price action here as always, and we need to get a little more constructive action on this near term over the next day in order to attempt a long again on cable. Otherwise, your next spot is 33.60, 80-ish. Okay, here's another reason why this level, current level, is so big. So I'm considering the low, the January low, not this crash low back in October of 2016. There are reasons for that, of course, but you know, there's questions arising of like, where was the market here? You don't really know because all the different platforms have very different prices, and this is also the closing low. This to me is more the low. So if I draw the fib from here, if I can draw it correctly, here we go. The 38.2 is right there. Okay. So big spot. You know, and look, it's everyone has different ways, of course, different styles in which they want to trade this. I mean, you know, you could be trying to buy into this level and take some off as the market rallies. When I was trading, you know, back when I was younger, I used to do that a lot more. I would trade into a level with really tight stops, and then, you know, I take it off when you got to bounce off the level, try to keep some for the bigger move. You know, now I'm doing things a little bit differently. It's just a little more methodical, I guess, but obviously a big spot here. All right. Okay, let's go to dollar yen and the Nikkei at the same time. So dollar yen, we're getting close. So 110, call it 110.20, 110.50. I'm still thinking that we try to get up there, and then we'll see what, you know, the level's made of. You know, if you can get up into 110.20.50 and show some resistance, then man, there would be a hell of a shorting opportunity. Again, you see this really long-term line right here, okay? I want to make it red because it's just so important. All right. That, I'll draw weekly so you see it. That is just this line. 2011 low to the Brexit low, 2016 low. Okay. And then, as you know, it was support throughout 2016. It was support throughout this year, and then we broke and went into free fall. And this is also a good example of a market and understanding its importance by what happens after you break the level, right? Is it a false breakout, or was it real, right? In this case, it was real. So that makes this level all the more important. Low today, we came down, actually hit the monthly open at 109.28. I had, you know, kind of labeled 109.44 as support because of the shorter term chart, which is right here, okay? This is the fork we're working with, and you can see here we've come off that level nicely, and we are thinking that if you can get up there over the next day or so, probably going to have a pretty good spot to fade into. Now, the longer term chart, right? We said 110.50 is the top of the zone. On this chart, you've got might be a little higher, right? Like 110.75, 110 is actually this upper parallel. But once we get into the zone, then we'll see. We'll see how it reacts and see if there's a chance to take a big shot. Again, when you're thinking of this, let's look at the Nikkei. So the Nikkei, we just took out the high here from this is S&P, this is SPY ETF. Hold on. All right, this was the chart from this morning. So pay attention up here, folks. A big level. Okay. Big spot. I'm actually paying close attention to this level here. That was the resistance back here too. So Nikkei. But this is also applies to general markets, right? I'm not too keen yet on shorting or trying a short, you know, even in the U.S. market, really until you get this thing to figure, the Nikkei to figure itself out, right? So here we go. Okay, so here was the chart from last night. One more high, right? So we get up to the 22,790 or so, and you know, my crazy mind says we get up there, and then that puts dollar yen at 110.50 or so, maybe a little higher, and then you get the reversal to the downside. Okay, so you're familiar with this chart. We've been looking at it for quite a while, but it all starting to come together, I guess, a little bit, right? Starting to fit. All right, let's move to the Australian dollar. This might not work out, but took a short. One reason why I was keen on shorting, even though not too keen on being necessarily long the dollar right here because of the run it's had already and the levels we're getting into, is the fact that you have support. I think bigger support is still lower. Okay, so the 618 of the entire rally is 73.27, which is like the exact low from May 9th of 2017, exactly 1 year ago. So I was hoping that we could get something like that and then roll over and then get a final swoosh, if you will, down to that level. It's also two equal legs. If we were to draw and subdivide the move right here, you get that right there as well. So just looks like a magnet to me. Now, even if we don't get there on this try, if we go into maybe a shorter term basing process and maybe get a move, we could get a move all the way back to 76.40 or so. The really short-term picture obviously starts to clean up significantly, then maybe there's actually a long opportunity there, but it's worth taking a shot. Here's another reason why it was worth taking a shot. Just draw this. Let's see here. There you go. Okay. See that thick line there running on all those lows, right? Resistance here, coming back into it here, monthly open here, which we actually tagged this morning and it started to come off. So that's why I'm okay with trying to catch a bigger downside move. You're going to get one more push in, one more push in the dollar, US dollar index, the FXCM one. It might actually be part of Aussie weakness, but should know soon enough. Okay, New Zealand dollar, let's go there. This thing's just been, completely been getting destroyed. And we could do the same thing with the channel that we did on euro. So longer term, actually trying to hold up a little bit on the sliding parallel, but I do think that the much bigger important level is down at, here you go, right down here. Mark says big lag in the screen, still looking at Aussie. Are we back yet? Are we looking at the New Zealand dollar here yet? Okay. All right. So this is the fork all the way back to 2011. The magenta line is going to be down near about 68.70. That level's huge because it's the 50% retracement of the entire move from 2016 low. And that's going to be in line as well. Just, look across the chart and see all the important prices that happen there, right? So I was thinking one more push to the downside to get into that region, and then would be interested in fading this decline. But that's New Zealand dollar. And we can do the same thing we did with euro, with the channels, okay? So eventually you would expect this line right here, this one, to provide some resistance at some point in the future because it's the corrective channel that you broke down through, right? If you remember, after we broke through it, we actually had orders to short it up here. We just never happened. Never got any sort of bounce. And it's unfortunate, but that is the market that we were dealt. So that's halfway, right? And then a full one takes you down here, which is pretty close to all of these other levels that we're thinking about. And if you're going to get a bigger low in Kiwi, sometimes you kind of go into a crash mode and you could overshoot it a little bit. So that whole area 68.50 to 68.80, that's why it's so important to pay attention to. Now, what about resistance here? So you can see that this line was support for the first bounce, right? Well, what you want to do is place a level over where you can see here. Over where the last resistance was, and that's probably going to be your resistance if you get a bigger bounce now. So right here, and you can see generally this is been a level that you traded on. So that would take you actually back to the month open, 70.30s if you got it, okay? Otherwise, the plan would be to look for a low in the 68.50 to 68.80 area. All right, so those are the two areas that you should know in Kiwi, I think, are 68.50 to 68.80 and 70.30s for resistance. So it's a kind of 200 pips apart, but possible sell area, possible buy area. Okay, dollar CAD. So the trend line from 2012, support again today. And let me actually bring in the other chart here. There you go. All right, so here we have it. All right, this is a 4-hour chart. noted that we were looking for a bounce, and I'm not sure, did we have a high volume level this morning on CAD? No, we did not. The only high volume levels we had them on Euro, and we had them on Pound, of course, with BOE, and actually on Kiwi too, on the move into the high. But Mahai says, I'm just letting you know I'm here. So you know what I like to talk about if you have time. Yes, I do. Yes, I do, my friend. So we will look. Don't you worry. All right, so here we have it, the trend line from 2012. You do have CAD jobs data tomorrow, and we've come into this level so far. I'm looking for a bigger bounce to the upside here. 60-minute chart, you got a pretty clean 5 down, 1, 2, 3, 4, 5. Back to 129 potentially. At least that's where the last big volume level was. That's also the 618 if we stop here. So yeah, I lean towards upside on dollar CAD right here. You know, with CAD jobs tomorrow, look, I don't know which way the market's going to go, but from a technical basis, I'm looking, I think the risk is that you're going to move higher from here. I talked about the tight range that we had in CAD the other day, right? And kind of said that we were looking to buy a pullback, if you remember, but I was kind of wary of the whole thing because a lot of times when you break out from an extremely tight range, we had a 9-day range that we had not seen. So it was 0.44%, okay? And we had a 9-day range that we had not seen in a long time. All right, so here it was. You can see the tight range and then the break higher from that range, right? Well, now we've come back. And by the way, this is the midpoint of the 20-day range, or sorry, yes, 20-day range, 2750, which is also support. But if we look at previous instances of this tight range, a lot of times this is what happens. This is what you get. So the last time we had a really tight range like this, it's over here, and you break higher, and then you break lower, and then you break higher. You know, so it's like a double whammy, false breakouts all over the place type of market environment when you get that tighter range. Same thing here, tight range, break down, break up, top, right? Let's see, let's go back. This one, tight range at the top, broke down. This one actually kind of would have followed through on. This is a really good example though of one, tight range, break higher, turn down, and then the trend resumes to the upside, right? Tight range, break down, up, and then down. So when you have those really tight ranges like that, and it's something that for some reason I guess tends to happen with the Canadian dollar, you get there's risk of having a bunch of false moves. Okay, so now that we've turned up and back down, I'm kind of on the lookout for support. And again, we've already really hit it with the parallel from 2012. All right, so that brings us to an interesting cross, which is EuroCAD. Maybe this is the trade right here. Maybe this is the best trade at the moment. You have the 200-day average in EuroCAD right here. This is the trend line from 2012. It literally is a perfect channel, right? Like a perfect channel. You have horizontal levels over here as well, right? Area of former tops. You've also got a downward sloping channel. So, you know, draw that in. And that's pretty much where we are. The year open is 50.93. But you can see that there's just so much here, and I'm looking for euro to rebound, and I'm also looking for dollar CAD to kind of work off of support. So maybe euro CAD is the best of the bunch. If you were to get a rebound off of this, you'd be looking to target back on the median line, 53.30, right? Look at all of the action on this, okay? And that could be part of a larger base, of course, but that's where the mind's at. Now, so far, 3 up, so there's nothing there. See how the day finishes. And again, you could end up having with CAD jobs tomorrow a quick spike or something to the downside, and CAD crosses, the euro CAD, dollar CAD, etc., before you have a bigger move up. All right, let's move on to crude oil, and we can look at some commodities. We'll take a look at gold actually today, and of course we'll look at the S&P. As Mahai, I'm sure, cannot wait to look at the S&P 500. All right, so crude oil, I thought we had topped with the really long-term parallel over here. That is not the case. We got another push. Crude's actually kind of spinning its wheels up here today, but we want to know where the next big levels are, and I think there's 2 of them, 73.29. That was the low from over here in November 2014 consolidation phase. And then the next one is actually the 2011 low at $75 on the nose. And those 2 areas, you know, the next area is to look for some sort of behavior change / maybe a really important top. I mean, the sentiment is getting pretty wild with crude at this point. Lots of articles showing up in the journal about crude bull market. You're starting to see the calls for 100 show up, right? That's usually a pretty classic telltale sign that you're much closer to a fairly important top than not. So look, commodity trends, currency trends, you know, they're not going to stop until the last guy cries uncle, okay? And maybe that's the area where it happens, right? So you do also have a parallel up there. This is a downtrending parallel too, which is good. So this comes all the way from the 2008 high, 2013 high, 2014 high, beautiful trend line, extended off of here and the support that was there, and that's going to put you actually below both those levels, but you know, 72.80 or so. So we're getting close. Pay attention, right? We're also in the seasonally bearish point for crude, and that analog that I showed the other day is still worth looking at or paying attention to, right? Matched up with the 2009 low, and you know, it doesn't mean that we have to crash this week, next week, or the week after, but maybe towards the end of this week, or towards the end of this month is when you really might want to pay attention to a short oil play. All right. If you look at Brent oil, by the way, it's actually the analog's even it's even more precise. So do this overlay right here. Okay, I don't have to go all the way out, but get the idea. And throw that on there, match up the weekly low. There you go. There we go. All right. You see that? Pretty good. Actually matches up the week of the secondary low as well. Matches up when you start to see some sideways action, right? It's not going to follow all the time perfectly, but this is probably about as perfect as it gets in terms of a market comparison. So, if this is going to work out or warn us of pending behavior change in crude, you're probably talking about a topping process for the next 3 or so weeks. So yeah, an interesting analog to be aware of. Shorter term on crude oil, let's go down to a 60-minute chart. All right, so we have this that we're following, right? Hold on. 20 degrees. Okay, 25 degrees. Okay, that should be right. 25, 25. All right, so if we go off of that, that actually intersects perfectly with the longer term level we talked about at 72.70. Maybe that's the spot. Okay, so here we are, and let's think about how, knowing what we know about sentiment in the market right now with crude, let's think about how how a market tends to right? And diagonal line is happening now. Be happening. So that level right there, that's the high volume day from the other day. That was the big sell-off in crude oil when the New York Times or someone, I think it was was it CNN, said that Trump was going to stay in the Iran and the oil there in. Hold on, I'm back. Internet problem. Can you guys hear me? Yep, now it's okay. All right. Okay, here we are. All right. All right, you should be able to hear me. Okay, so what I'd be looking at with this is with crude oil is if we've dipped a little bit here, right? Nothing to write home about, but we have come off a little bit. And if we do continue to come off some, pay attention to that zone 6906 to 6950, because what you might have here is something like this. Okay, 1, 2, 3, 4, 5. That would be your diagonal. So I'd like to see if we are trying to top, or if crude oil is trying to, end this run, then it's a great way to do it. What you'd want to see is, a deep retracement of this move up, and then another run, because again, that would make 5 up. It would be overlapping, very overlapping, and it would also probably, provoke a lot of emotion because you'd have very sharp moves in both directions, right? And that's when market turns occur, they're extremely emotional. So pay attention to that 6906, 6950, and then your upside areas, again, probably 7280 to 7330 to start, but you're not making any any guarantees on that, right? It's difficult enough, but those are the first areas I would pay attention to. All right, let's go to gold. So last week, talked about something like this, and this is still going on, folks. We were talking about maybe getting a flat, right? A, B, and then 5 down. 1, 2, 3, 4, 5. Is this whole thing 5, right? Or sorry, 4, excuse me. This whole thing might be 4. Might have A, B, C, 4, lower for 5. So you could still get one more hosing, if you will, in gold here. And I know I say not to try to make assumptions about other markets, but sometimes when you get towards the end of a move or a theme, things do start to make a little bit more sense. And if you think about this, we just talked about maybe getting a move in dollar yen, right, up to 110.50 for a bigger top. If that were to occur, you know, a drop, a final low in gold down near 12.95 would also make a lot of sense, wouldn't it? Right, and you get those two turns together. So that's something I'm keeping an eye on. If we do start to extend to the upside and trade out of this channel, then I'll change my tune on gold and be more receptive to, you know, a low of sorts already being in place. But as it is now, I still think that this is the game plan. Okay, and then again, let's go to the daily chart here. This is your linear scale. This is your log scale. Log scale's already hit support, already hit the 200-day. Linear has not. In this case, it does seem like linear is a better fit, right? Because look at all the median line trading that occurred, including the last touch on 411. You did not get that on log. Okay. Also, just generally, sorry, hold on, lost my train of thought. Just generally, that 1295 area is really, really big. It's been highlighted here for a while, but the 1295 area, right, resistance April, June last year, traded around it a lot in the ensuing months, including November of last year. So would continue to respect that possibility. Okay, S&Ps. So laid out a possibility yesterday for S&P 500, and it seems to be happening or going on. So we are trading at the median line of this new, you know, so-called new bullish fork. Okay, big spot here. I would look for it to pause here, and essentially this confirms. Not yet, of course. You do want to see a reaction to, you know, that the market's trading on it. But if you look at, you know, there was support on it 2 days ago. So now that we've broken through the trend line, I'm sure that the sentiment is probably getting fairly bullish and maybe in need of some sort of a shakeout. So if we get that, then you're going to watch for support starting here first. But like I said in the post last night, it could be as deep as 2630. And let's just think about what the relation or the rate looks like for argument. But for argument, say that you pull from here, you know, 40 pretty good. and that really set the table for their move higher. And it's looking at 2059. Hold on, I should be back. I think I need a new router. Okay. I think I need a new router. That's probably the problem. So you can hear me now? Okay. All right. So if we do stop here, then like I said, you're looking for support because you have a confirmed bullish structure. If you don't stop here and we go straight through, then 2759 is huge. Okay. That level is this fork all the way back to 2009 low. And that, excuse me, and that level is going to be, you can see, you've looked at this before, but look at all the levels that you've traded on, right? Including recently. So, and then the horizontal level, 2759, just big, big, big every time, anyway, you slice it. So this is probably where you'd want to return to some sort of a short position. So two ways to go about it. So Mahai saying DAX and S&P and Nikkei. So don't forget too, these take into account all the currency relationships, right? So one, this bullish count could be wrong, right? This could actually be, you could be in an A wave and this could be a small B wave triangle. So this could be big A, little B, little C, little D, little E, and then big B ends up here. You know what I'm saying? So that's why, I mean, like the best thing to do is to pay attention to the levels. And in this case, 2759, say you get there at the same time as the Nikkei is putting the finishing touches on whatever it's doing, right? And then you would look lower in both, okay? The DAX overcome pretty much everything here. And a lot of this is going to be euro weakness, right? It's not stat terms, but a chart of say EW basically having problems the sorry about. So if I put up EWG, right, you can see that you haven't had nearly the run that you had with that you did in the DAX, right? Because a lot of this is simply euro weakness. Okay, so a lot of this is simply euro weakness. So again, don't try to you know, stock markets can go in different directions, right? But the point here is that you have major resistance up here in the Nikkei at 22,760, and you have major resistance in the S&P up here at 2759, right? So maybe the more likely scenario is that we just blow through it all. Okay, maybe that's it. I don't know. That might be what's going down. But those are the big levels to circle and to know heading into, the next couple of days. All right. Okay, so I'm gonna leave it there. Thank you all for attending. Thank you for your time. Sorry about the sound issues. Got to get that figured out. It's not really a sound issue, it's an internet issue over here on my end. So I will do my best to figure all that out before our next webinar. But have a great rest of your week and a great weekend. And I'll talk to you next week. All right. Thank you. Bye.